Hi and welcome to the latest edition of the Magellan Minute series. My name's Felicity Haynes, Head of Retail at Magellan, and today I'm joined by Emma Henderson, who's an investment analyst within our Global Equities team. Hi Emma.
Hi Felic, great to be here.
Emma, you and the team spoke in our In the Know podcast series in July, speaking about the consumer sector. Since then, how's the consumer landscape evolved? Is there anything that you can update us on?
Sure. So with respect to Western markets, I'd say a lot of the themes that we were talking about back in July remain broadly consistent. We're clearly seeing somewhat of a slowing of the consumer in the US, but stepping back, overall the consumer remains in a pretty healthy position, and that's being supported by strong levels of employment. However, as we spoke about back in July as well, when you dig into this picture a little bit more, we're seeing some pretty clear variations in performance by income cohort. We spoke about a lower income consumer that was under significant pressure, and this has been after the cumulative waves of inflation over the last couple of years that have dramatically increased the cost of everyday essentials such as your household grocery bill. We're still seeing this pressure impact that low-end consumer, although I'd say early commentary from this round of reporting has suggested we might be seeing that start to stabilise, and that's based on commentary from consumer companies but also the banks. This low-end consumer pressure has had some pretty disproportionate impacts on the retail sector depending on where you are. So we've seen some pretty acute pressure in areas of retail like the dollar store chains, and also seen some impacts in the fast food industry where we're seeing brands really have to lean into value menus and promotions to try and drive traffic. Then moving up the income spectrum to the middle to higher income consumers, from a fundamental perspective, these consumers are in a healthier position, but they haven't been immune from the rising cost of living, rates, political and geopolitical uncertainty. So we have seen some caution and confidence issues impact that consumer, and consumers are tending to be very choiceful in how they're spending their money at that level. Where we're seeing brands or companies outperform in this environment is where they're either delivering very strong product innovation, for example in Colgate's premium oral care business, or where they're offering goods or services that are considered very good value for money, say a Chipotle burrito or bowl. There's also been some other interesting relative winners in this environment, so we're still seeing travel and experiences outperform goods in this environment. And we've also seen quite a lot of strength in the convenience economy. So even though some of these middle to higher income consumers are pulling back discretionary spend in certain items, they're still prioritising spend on things like expedited shipping on your e-commerce orders, food delivery platforms and things like Ubers. So that's been quite an interesting dynamic.
And we talk about this in terms of Western markets quite a lot, but there's been some news around stimulus coming from the Chinese government. Magellan have been fairly cautious on the Chinese market over the years, but does this news of stimulus make it more interesting for you and the team?
Sure, so you're right, Flick. Particularly over the last month or so, news flow out of China regarding government policies has been a big sentiment driver for any consumer stock with a reasonable exposure to China, say luxury and beauty. Stepping back before this recent news, I think it's pretty important to note that our caution with respect to the Chinese economy and the Chinese consumer had only been growing. We'd been seeing property prices continue to tumble. That's having a negative wealth impact on the consumer. We'd been seeing low business confidence, rising unemployment, most recently, particularly amongst the white-collar workers in China, which are an important consumer cohort for Western brands. And then unsurprisingly, low consumer confidence, with that consumer confidence level having returned to the all-time lows that we saw back in the COVID lockdown periods. And then from a corporate perspective, it's also been a pretty challenging environment. The environment in China has been very deflationary. We've seen brands have to really lean into aggressive promotions to try and drive demand, and it's been almost impossible to take a price increase. So we've been feeling pretty cautious over the last couple of months. As I mentioned before, we're early into third quarter earnings, and what we've seen so far has been a very clear confirmation of a deterioration. And we expect that to be a theme over the companies that are going to continue to report from here. So I guess that was how we were feeling prior to the recent news. In terms of the news that's come out so far, any government stimulus and policies to try and stabilise the economy, we would say this should be positive for the consumer. However, the way we're thinking about it is that this is predominantly going to be reducing further downside risk from here and hopefully putting a floor under some of those economic indicators we've been talking about that have been weighing on the consumer, rather than creating any material near-term upside to near-term earnings out of China. We're still pretty early days in what this stimulus is going to look like, and there's a lot of uncertainty, around the size of the stimulus, the design of the stimulus. In terms of size, we're thinking this is going to be something a little bit more modest. We're not expecting a massive wave of stimulus like we saw from the Chinese government back in the GFC that really underpinned years of strong growth and consumption. And then in terms of design, we aren't sure that this is going to be really focused on the consumer. I think in Western markets, when we hear about fiscal stimulus, often we may think of large-scale cash distributions to, everyday people like we saw here in Australia and also in the US during COVID, which can drive a material uptick in spending on things like discretionary goods. I think we have to keep in mind that in China, there isn't really precedence for this kind of consumer-driven stimulus. So we've heard about measures to improve, to support local governments and to try and help the property market, which should indirectly benefit the consumer and hopefully help with confidence levels. But the benefits from that in terms of spending for our companies may be more gradual than the market's hoping for.
And Emma, we don't hold any domestic Chinese stocks within the portfolio, but we do get exposure to the Chinese economy through some of our multinationals. How are they faring during this time?
Yeah, so that's right. We don't hold any domestic Chinese companies. And, as we've spoken before, a key reason for that is we do struggle to get a lot of confidence that governments and regulators aren't going to change the goalposts for corporates, and that we can have a high degree of confidence that companies will always act in the best interest of shareholders and not other stakeholders. So with respect to multinationals, just given that cautious outlook I spoke about before, we've been very selective in how we've tried to maintain exposure to the Chinese consumer through this period of volatility. We have 2 small positions in LVMH and L'Oreal in the luxury and beauty sectors, which we do consider to be 2 of the highest quality businesses in our investable universe in global consumer. Unfortunately, no company has been immune to this slowdown, so we have seen both of those companies post negative growth out of China in their most recent results. But when you step back and look at how they're faring relative to other competitors and peers in their category, we've seen both outperform. And I think that's really reflective of the quality characteristics that we like in these companies. So the strength of their brands, the loyalty of their customers, but also very strong execution and disciplined approach to growth in China. I think where we've really seen companies suffer is where they've chased growth for the sake of growth and are now really feeling the impact of that.
Emma, we've also had some exposure through the restaurants companies as well.
Yeah, that's right. So the third consumer company through which we have some exposure to the Chinese consumer has been Yum Brands. Like all consumer categories, the China restaurant sector has been under some pressure. But again, similar to LVMH and L'Oreal, we've seen Yum's earnings out of China be more resilient than peers. And I'd put this down to a couple of reasons. The first is that Yum Brands operates a franchised model in China, which is inherently more defensive in times of disruption. So as the franchisor, Yum Brands is only taking a royalty fee on revenue out of its China network of KFC and Pizza Hut stores, which means that it's not exposed to margin pressure that we can see through the use of aggressive promotions or any operating deleverage on negative top-line trends. The second reason I think this business has been more resilient really comes down to the strength, the financial strength and operational strength of its strategic partner in China, which is a company called Yum China. Yum China's had a very strong net cash balance sheet and has been generating cash throughout this period, which has enabled the network of KFC and Pizza Hut stores to continue to expand in lower tier cities, even though we've had this broader challenging consumer environment. The operational strength has also meant that Yum China has been able to really pivot very quickly to focus on value and the things that are resonating with consumers. So this has enabled Yum's brands not only just to compete in a tough environment, but to gain traffic share, which I think is pretty remarkable.
Great, thanks Emma. And thank you for joining us today. If you have any questions, please do reach out to the Magellan distribution team, and please feel free to share this with your clients and colleagues. Thank you.